So this is where you close down about 20%. Why? Well, here's the reason why. Hey, what's up? Welcome to my channel. My name is Anthony, founder of Arete Trading. The goal with this channel is to elevate your trading to the next level. So let's jump right into it. Today we have 10 stocks to go over, some shorts, some longs. We're going to start with what could be an absolute dumpster fire. Nvax actually gapped down today, and we can see this huge move to the downside. Just measure that off for you from the top to the bottom. So this is where you close down about 20%. Why? Well, here's the reason why. FDA scientists say Nvax COVID-19 vaccine is effective, but also raises concerns. This came out today and is the reason the stock is down. Scientists at the Food and Drug Administration said COVID-19 vaccine developed by biotech Nvax was effective in preventing disease, but questioned how effective it was against circulating strains and raised concerns about a potential rare side effect. Their analysis laid out in briefing documents released Friday ahead of an advisory committee meeting on the vaccine sent Nvax shares down more than 16%. The FDA scientists raised concerns in particular about the risk of myocarditis, pericarditis associated with the vaccine. Both are inflammations of the heart, surrounding tissue, and have also been associated with the mRNA vaccines, Pfizer and Moderna. The FDA's vaccine-related biological products advisory committee will meet on June 7th to consider whether or not the vaccine should be authorized and make this another option. The U.S. agency is not bound by the recommendation of its outside advisory committees, but tends to follow them. There has been interest in this vaccine because it's not an mRNA vaccine. It follows a different protocol. So the bottom line with it is if this vaccine by this advisory committee is not recommended June 7th, the stock is going to have issues. Now that we understand the reason, we can look at this and realize that we need to focus on June 7th. But with these advisory panels, I've been through this a lot in my trading. These are binary events. What does that mean? That means we're going to go one way or another, and we're going to go violently one way or another. So what we need to do is say, where would major support be on this stock if it blows up? Because yes, I understand that you're down about 80%, but getting cut in half again from here would be a blow up. So if you take a look at where we're having support when they came out with the product and that gap up from that day. We've been holding there for about 2 months now. So if this does not get approved in the US, which is one of the largest drug markets in the world, that's going to be a problem. So I think you're looking at that $19, $20 if you're lucky that you could possibly hold there on this Nvax if it does not get approved. So we'll know June 7th whether the advisory panel is going to approve it or not. The other thing you could do with this is you could actually use a long straddle on this if you know how to use options, because it's going to move violently. Meaning if this gets approved, the stock is going to spike. I would be leaning towards maybe it doesn't get approved, but it's really above my pay grade. You really have to see what the FDA panel is going to come out. But the notes that are coming out right now are pretty clear that it's not looking too good. So I'd be leaning on the short side, but you could also just put a long straddle on and just come out there and do your little calculation and figure it out. I can actually, reason I bring that up is because people were asking about them. Please comment below. It definitely helps me create the content, and that's why you're seeing a little bit different content tonight. Now, another one that to me looks like it'd just be an absolute disaster on the short side is Coin. So this story was broke today where Coinbase now is not only freezing hiring, but they're so worried about their financial condition that they are actually telling people that they hired that they are no longer going to hire them. This was broken by this on Twitter, Team Blind, where they talk about welcome email sent to hires 2 weeks ago, promising they're not going to rescind their offers, that they wind up rescinding those offers. If you take a look at this, hi future Coinbase employees, you may have seen this week Coinbase posted an internal blog posting our intentions to slow hiring. First and foremost, I want to communicate we're extremely excited about having you join Coinbase. You can see the whole theme. They're basically reassuring them, we've planned for this. We have a strong balance sheet. We have $6.1 billion in cash and equivalents and a decade of experience of managing volatility in crypto, which is kind of interesting considering they haven't been around that long. But now, here's the second part of the letter. We regret to inform you as a result, we've made some very difficult decisions. We have to rescind your offer. So legitimately, within 2 weeks, they've changed their opinion of what they're going to do. Now, the reason that this is important because that could mean that their financial situation is actually deteriorating faster than they have anticipated. So to kind of put this in perspective, FedProm said this best on Twitter: you apply for a job, you pass a phone interview, you do a 3-hour on-site interview, you get the job, and then 2 days later, before you even start, the company says, never mind, we're going to withdraw the offer. That's just absolute insanity. And then you have this guy buying a $133 million house 4 months ago. So you can see clearly that fiscal responsibility is not their focal point. Another thing that I would really focus on is understanding the fundamental problems that are going on here. These guys on the Crypto Critics Corner, they did an excellent job. Cass and Bennett, they interviewed Jim Chanos, who is a Wall Street legend and one of the only people left that's been running a short fund for he does a really good job of explaining why the assets under management that are currently earning about 4% should be closer to 25 basis points, which is where Schwab is at. He thinks the stock's worth about 20 bucks. I tend to agree. I actually think it could go lower. Now, with Coin coming out and making all those changes and really reevaluating their balance sheet by the week on who they're hiring and really not caring how they're affecting those people, I'm not going to say it from that standpoint that they should be worried about how they're affecting those people. What they should be worried about is the complete mismanagement of their hiring. It's very clear that they have issues, and that podcast that I recommended, I would listen to it. I would definitely listen to it if you're interested in shorting this, or if you're long this and want to know why you might be wrong, right? I could be wrong too, so it never hurts to get a second opinion and really understand the long and short side of a trade, especially if you're trying to stay in there for a long period of time. But to me, just getting up to this 21-day rejecting, this is exactly where we shorted. See this little flip right here? So when we flip that dojis are periods of uncertainty, we know that. So when we flip the 21 and we flip this was our short that we put on, and we just stayed in the short the whole time. We're still in it. I don't see any reason that this is not heading back down to this 41 level and then going from there. I do tend to think that it's going to go much lower than that. CVNA is another one that I am looking at adding to the short, and we recently shorted as well in the trading room. So again, all we're looking for are spots where you can run up and then reverse. Now, when you're in a stage 4 like this, okay, stage 4 is just absolutely carnage, right? You can see the carnage. So what we're looking for is even bullish patterns. You might want to remember this, and I'll zoom in on this. Even bullish patterns become reversal. So here you have a bullish engulfing. This is a little advanced. But you see I have this bullish engulfing here? You have a bullish engulfing right here. Notice how this bullish engulfing got you 3 days, 2 days really of profit. Notice how this bullish engulfing got you 0 days. Okay, that's telling you that the buyers and the people that are covering are drying up, okay? Notice how this bullish engulfing got you a reprieve of 4 days. See how the reprieve's getting smaller and smaller on bullish patterns? When you see that and you're short, you want to pay attention. This is setting up to break. I'm just waiting for this to break through like 25.5. I think that this could be single digits, and there's reasons behind that in regards to their financial balance sheet, how they're trying to raise capital, the fact that they lose $3,000 every time they sell a car. We went over that in the live video today, pre-market. It was kind of funny. Someone said, just stop selling cars. And it just kind of makes you laugh. But, you know, this is Vroom. This one's down 97% since it went public. I don't see any reason why CVNA is not going to see the same fate. So we do have some longs. Now, AMD, I want to point this one out. They have come out, they raised guidance, they doubled their guidance. Now, again, as we've been talking about this, I find that really very, very optimistic. But are they going to be able to hold that guidance with what's going on there right now in the recession? And I don't have an answer to that. The answer I do have is that if you want to find the strongest stocks in the market today, write this down and remember this. Go through every stock today that opened and is above their opening price. So forget about the fact that whether or not you're above the closing price. For example, forget about the fact that you closed here. But if you opened and you're above it, you had buying that day. You had net buyers. It's a very simple technique, right? Why is that important? Well, what did the SPY do today? The SPY got absolutely decimated, right? By decimated, I mean a whopping 1.5%, and people are panicking. We're going to get to this and cover this in a little bit. If we're down 1.5% here and we didn't open over the close and AMD did, well, then I have a stronger relative strength than the rest of the market. If we go through and compare it to other stocks, we can see that Nvidia did not fare as well. So that tells you where the relative strength is. All you're looking is to make sure that this can hold this level right in here. And then we just want to see it push up. If you look at this on the weekly, you can see exactly where you are in the 21 week. You can see your little curl here. You can see this massive trend. If you break this falling wedge to the upside, that's going to be massive. Looking at this on a monthly, you can actually see the reversal pattern and the outside month that's starting to form here. And that's something that we have not had in 1, 2, 3, 4, 5, 6, 7 months. We have not had a higher high in 7 months on the monthly chart. So you are seeing real buying coming into that name. And I like it. I like it a lot. The downside is if there's some flim-flam, if they come out and say, hey, earnings aren't going to be as good as we thought, well, that's going to be a problem. But we don't really have to worry about that in the next section. So I want to put this one out there again. This is in the newsletter. There is a free version of the newsletter if you're not in the trading room, and that is in the link in description. Click it so you can follow along with us. I put out a lot of ideas and macro views in there, and it is extremely helpful no matter what level you're at. But this was something that we started picking at again at 18 and a half, 19 and a quarter. Why? Because we started seeing the writing on the wall with what's going on with crude. If you've been following me for some time, you know we've been playing with this. The first entry was 480. If you just understand what's happening here and you overlay this with crude and take a look at this, this was the last time you had something similar to what's going on right now. Okay, with the disruption of what's going on in oil prices. Okay, forget about the fact that this is what happened in 08 and how we ran up and then ran again. The other thing to understand is BP. BP is going to be affected by UK windfall tax. All right, so if you understand that, the 25% windfall tax, well, they just happen to have a trust where they can funnel profits to and pay it out in the dividend. Okay, and this trust just happens to be this Prudhoe Bay that just happens to be in Alaska. I mean, there's levels to these things. And when you understand those levels, you understand the fundamentals and macros behind what these corporations do, you can profit from it. So right now, when they're earning $80, we were getting 80 cents. When they were earning $1 or $100 on crude, we were getting $1. Right now, we're at $1.20. So I could earn $4 or $5 in dividends. How long do you think this is going to stay at 20%? All oil has to do is stay up, and this will continue to grind higher. I think that this is going to see 30 bucks. I mean, we got into 20 and we're staying in the 20, and I see no signs of it slowing down. A matter of fact, what we're seeing is we're just seeing the space continue to light on fire. ROCC, I've been watching this one, and actually someone in the trading room has brought it up, and this one was not really on my radar, but then I set this level and just wanted to make sure that we broke it, and we finally did. So we finally closed over this on the weekly. I like seeing closes of these oil and energy names on the weekly because sometimes you get things like this, okay, and you'll get these long-legged dojis, which give us uncertainty, and then you're sitting with this for the next 3 months waiting for it to come back. And I have the patience of a gnat, so that doesn't really work for my trading style. So the fact that I've now done that, we flipped that level, you can see that the next point of interest on resistance is not to $58. So there could be 20, 25% in this name, and that whole space is just on fire. This trade is not going away. One recommendation I do have is if you follow along in these videos that I put out Monday through Thursday and these weekly videos I put out on Saturday that come out every time at 10 o'clock, focus on the names and keep them in a file. Because this was one that we went through a couple times. Okay, we went through this at 11, cycles back through, sets up this beautiful flag, breaks out of the flag, pushes higher. This is exactly what you want to see. This is the kind of action you want to see. Breaking out, and now we're setting up to even push even more, right? And if you go take a look at this on the monthly, this is what we call blue skies above. There's very little to concern yourself with here. And for those that have been following me on Twitter for a period of time, you know I love this pattern. Okay, when you start flipping upper channels, you can go parabolic. I've got 4 days to cover of interest. I don't know who in their right mind shorting this, but they need to cover. They have a real problem on their hands right now. So we were up 9% today in a tough market. I really like this. I think that this will have a two handle by the end of next week, possibly. Nvax is another one that hit my radar. This is also in bar chart, the 100 group. That's a pretty good website to go. It's free, barcharts.com, and they have a list of 100 names. Strongest names out there in the market. It's actually very interesting to see how they change with the times, but it's a free service. You might want to look at it. So see how you just broke out here? Simple enough trade. You don't really have to think too much about it, right? And you can see this channel, but I will drill into this channel so you can see it. So let's get into more of the nitty gritty on what the heck's going out there macroly. The theme is pretty clear here, right? I mean, we're getting it. Energy. If you doubt where your money's supposed to go, it's supposed to go into energy. If you want to know where, it's supposed to go into energy, specifically oil names, okay? CEO of Chevron came out today and said we might never see another refinery in the United States. Could you imagine with what's going on right now? Okay, we're not up to speed on green. Okay, it's not going to work. So we're going to have some problems. So energy, energy, energy. Okay, we're probably going to take out the highs on crude oil. I don't see how we're not going to. Maybe we should talk about that for a moment so that we understand that a little bit. So let's talk about this, okay? You based for a period of time. Let's get rid of these anchored VWAPs, get rid of all of them. So I'm gonna just throw an anchored VWAP right up here at the peak so you can kind of see where we're at, and then I'm gonna get rid of this 21. And you can kind of see now that everybody is up in this trade, and now this has become support. I don't see any reason why you're not getting back to this level, and that's just the 22nd. Now, if you go out further on this and you drill back all the way, I don't see how we're not taking out the all-time high from 08. I really don't. The situation that we're in right now is much more dire than when we were back here. Much more. Okay, this was demand overheated economy. This is a supply issue. It's very different. And right now you still have Shanghai shut down. You have 26 million people that aren't driving and shipping. What's going to happen when that kicks in? So this is a real problem, and Russia knows that it is, and it's leaning into the problem. It has no interest in trying to fix the problem. Where the US and the EU took a very short-term approach, Russia is taking a very long-term approach to this issue. And that is going to drive oil prices higher. And the way to benefit from that is to buy energy names, specifically focus on oil. Coal's starting to roll a little bit. I don't like it. But let's just talk about the elephant in the room. So you need to watch the 10-year and what's going on with that. Right now, you have a wedge line we've pulled back, and you can kind of see how we're trying to break out. 3%, as I said in the newsletter, is going to be an issue for equities, and you're going to have to watch that. So watch 3% on the 10-year. We do not want to see that. We do not want to see a higher high, and we certainly don't want to see 3.25, because that would be the first time. Okay, let me just show you this. You can see this. Hey, here's your trend line. We've broken. Now, you had to realize that we weren't going to go to zero. So obviously, at some point, we're going to break a multi-year or multi-decade trend line, which we've done. But you do not want to get that higher high right there, which is 3.25. If you flip that, you're going to have a higher high. You have not had a higher high since the 80s. That's a real problem. We had some back here, and then it fell back down. So we could actually say during that time, during 95, we actually did have one, because that is pretty accurate. Right here we flipped, and then we just went back to it. So you need to watch this very closely, because this was not a great time for the market. So just watch it. It became a great time for the market after 95 on was awesome, but it was not. So just be very careful there. And we should talk about the SPY and what happened today, because it is important. So right here, let's just look at the 5-day and what's going on, okay? I want to just focus on this. This is not a bad day. You still have this flag here. My issue with the SPY is the following. I closed below the 5-day. So when I close below the 5-day and I haven't closed below the 5-day, I can tell you that every single drop in the index has come from closing below the 5-day. If you stop buying stocks and just wait, which we did today, we traded, but as far as adding to long-term positions that are not in oil, you just need to take a break unless you're going to trade for like the day or two, and just watch this. Because if you use this line, this is a really simple guide. You want to remember this. If you're just not buying unless you're above the 5-day, you have saved yourself an inordinate amount of money. So if I can leave you with anything, do not do this unless you're above the 5-day. Just wait, and if you break the 5-day, you start leaning to the downside again. I'm not convinced yet that this is not a one-time event, so I'm going to wait to see if I break that doji before I press the shorts. But I would lean towards the shorts I went over, because fundamentals are going to matter. This is going to turn into a stock picker's market. If you're looking for more entries and exits and you're looking for specifics, the trading room is currently open. It's open for enrollment. I don't do it often. Last time I had the room open was November, and we get very specific in the room. So if that's something that interests you, just click this link and you can see a preview on the top right corner of what is included in that room. So that's pretty much it. Everybody have a great weekend and trade to win.